Okay, let's get started. So our journey here of sorts, guys, is coming to an end. And so I thought what would be good today is to sort of try and put it all together and run through how maybe someone like myself, and with your help, would look at the markets, do some analysis and trade planning and stuff, and then maybe how we would look at executing trades, how we would manage them. Yes, little holiday for you tomorrow, Cyborg. And then maybe what would happen with the old psychology around all that sort of stuff. Okay? So, if I just pull up GFT and sit down, if you were sitting down in front of your charts right now, remember one of the things let me just go back to my presentation real quick, but one of the things that the first, whether the market on the given day that we're sitting down to go trading is being fundamentally at that moment driven or technically driven. And maybe it's something that, it's not essential, but I think it definitely is worth knowing. Maybe it's something you have to get a little bit of experience with. But if you're going to be a competent trader, even if you're not a fundamental trader, I'm not a fundamental trader. I'm not trolling through Bloomberg. I'm not reading the Wall Street Journal. I'm not reading The Economist, and I'm not theorizing about the fundamental future of any economy. But if the fundamentals I believe are moving the markets, which you don't need to be a rocket scientist to work out, I think you do need to change how you may trade technically. Okay? So every day when you're sitting down to do your analysis, I think you need to do a little bit of due diligence on maybe what's driving the market that day. So what would that be? Well, it doesn't take much to work out that it was FOMC today, and obviously right on the news we got, if we just look at the pound here on a 15-minute chart, FOMC moved this down, and then if you sort of spend a bit of time reading the statement, no QE3, etc., and you look across the markets around the world, stock market down 290 odd points, yada, yada, yada. And then you maybe go to your longer term planning chart, i.e. if you just pull up, say, a 4-hour, the pound technically is broken previous technical lows and is riding this 4-hour 5. Sort of, I don't know, experience would tell me that the fundamentals are sort of driving where we're going. And that's important. Why would that be important to me? Any ideas why, looking at this chart here on the pound, if I was sitting down right now and said, okay, am I going to trade the pound today? Why is that important? Right, I need to decide how to trade. It's obviously with a trend. Obviously, the trend is down, isn't it? What else? Could anyone honestly see me longing that thing? I mean, does anyone see a long there? No. There's absolutely no long there, is there? So, obviously, crashing through the floor. Now, why do I say fundamentals are important? Because if fundamentals are driving the market, guys, they don't really pull back much. And if they're not your thing, it's going to be one of those days where you might just step away. I'm just trying to find another example here. Maybe way over here, fundamentals drove this. See us trending up over here on a 4-hour chart. Up we go. Up we go. Little hesitation at the top. That, to me, on the downside, is fundamentals. That's like 3 or 4 days of just riding a 4-hour 5. That's very hard to try and get in and trade on a pullback. right? G'day Trader Ron, how you doing? So you're either going to be struggling along, or maybe you can come up with some tips and tricks. Oh, Cyborg, I wait for a pullback. But see, normally, technically how I would be trading, right? Normally how I trade in a given day, when I feel things are technically in control in a downtrend, the market's sort of doing this on a 4-hour chart maybe. Well, I'm going to wait for that sort of 4-hour swing and continue. But it sort of steps its way down in some nice sort of a stepping manner. With a sort of fundamentally driven market, it's like, not really. I'm just leaving the station without everybody on it. You know, lots of money is moving out of there, you know, back into USD strength. Sort of everything's coming back to America as a maybe some sort of flight to safety or something. Right? So how could we do it? Well, we mentioned this before under our little strategies area. Is, you know, once you've determined whether it's fundamentals or technicals and what's happening, well then you should maybe have a strategy for it. Versus, oh, I only spot trade, I only position trade, I only do this. It's like, what about something that's like fundamentals are driving the market? Have a strategy for that. Technicals are driving the market. Have strategies for that. Breakouts are good. For sure. Okay, so we could look at fundamentals strategies, trading technically. So you look at the pound here, just waiting for the screen to refresh, and you'll notice on the old EMAs that daily 21 below the 55, same with the 4-hour, same with the hourly, same with the 15. So if they're all down below each other, every single thing is in a downtrend, right? Every single time frame is in a downtrend. It's actually something, developing my skills as a trader, I really struggled with. Because I want that big fat pullback to get in, and it just doesn't give it to you. And then day after day, it's just like, please pull back for me today. No. Next day, please pull back for me today. No. After a while, it becomes a little frustrating. Okay, so, well, if everything is down in every single time frame, that means our 15-minute is down. Okay, let me cancel that. And we can't even come back and pull back to a 15-minute 21 yet. And there is very good angle and separation. Okay, so my theory is to even get a pullback on this pound, you know, this might do something like this, pull back to the 21, get resistance, you know, double bottom, you know, have another little shot at getting up, that sort of thing, before it might even roll over, because there is so much resistance here, and so much getting pushed down by all these EMAs. Remember, the 4-hour 5 is going to start pushing down on price. They sort of all become significant. 4-hour 5, sort of like your hourly 21. So the decision goes like this, is if I'm going to trade the pound today, I mean, I can put a fib on the last main swing or something like this, and I can hope and pray that price comes back up to a selling zone, like up through here, maybe gives me a change of trend on a 15-minute chart. Okay, so we might sort of, you know, double top, lower lows, lower highs, and start moving our way down. I can hope that, or I can just make the assumption that, you know what, we can't even pull back to a 15-minute 21. So if it does, I will literally take a shot from that area there. Okay, so if I get back to that 15-minute 21, that's going to be the first place in a fundamentally driven fast market I'll take a shot. Okay? Now, that could be somewhere like this, Lucas. See, this is where you have to get a little bit like, I would have to probably put a stop above the 55, because I use the 55 as the next sort of area of resistance. I don't trade off it, but I use it to sort of gauge two things: the angle and separation to see how fast this market's moving, and then then I gauge it for my stop loss, because it's dynamic, right? So that's the sort of area I do it. Now, that would be plan A. How do you know that's bad, Cyborg? Because we haven't even spoken about where it's going. Well, don't tell me bad risk reward when you don't even know the target. Right? The thing about this is it could just leave for days. And that's what you're going to try and hope for, right? This is just going to continue and ride this for days and days and days. Okay? So that would be plan A. Now, admitted, I was about to say when Cyborg says, well, that's bad risk reward, I sort of do agree. Okay? So what I would also like to see is in this area is some sort of change of trend to help support that, and then stop above the highs, and then off you go. Okay, so that would be sort of plan A. But it's sort of literally what we're talking about. Well, people use it, Gary. I don't use it ever. The 55. Mine are 21s. So I'll see the 55. I look at the 55 area as actually being like the hourly 21. Okay? So if that fails, plan B, guys, would be, well, 15-minute support's over. Well, where's the next area of resistance? A couple of weeks ago we had this conversation. You guys couldn't guess it. But it's going to be back up here in the hourly resistance. Because to turn a market around and everything's down, practically you need to change a 15-minute chart around that'll find resistance. You need to turn an hourly around. But every single level of resistance will get struck and try and get respected. So even if you're going to turn this chart around longer term, price is going to go up to every level of resistance and nearly come right back down to the lows, right? So that sort of area on the hourly would be the next place where I would then look to short. This is the nature of the beast. If plan A over here fails, you need to go to plan B, which is I'll just take the level up on the risk reward, take the level up on the fractal, so go hour, g'day Daniel, and then I'll just trade that one. And that, in this sort of market, guys, in this sort of market under these conditions, that would happen to me fairly regularly, where I will get in a trade on the 15-minute and take a loss, and then I'll just go up to the hourly and do the same thing, and that works out and goes and makes you 150 pips. And so the 20 pip loss or whatever on the 15 was no big deal, and then it just keeps going. And once that fails, guys, because of how fast this market's moving down, we'll just come back over to the 4-hour and then sort of take that one. But up in this 4-hour area here, would be waiting for our 15-minute change of trend or a confirmation pattern, because that's a long-term time frame. So something a bit like this. We set this up in class yesterday in Asia. But you've got a trending 15-minute chart up here, and it rolls over as Asia opens, so a little time of day factor in there, and then down she comes and got that pullback for the FOMC today, and boom. Okay, so If you are going to trade today in these markets, I feel that the psychology can actually start to come into play, because a trader cannot help but feel that this has got to end at some stage. Oh, just like a 50% fib of the drop or something, Benny? Yes, Gary, I think it is, because its fundamentals are driving it. See, we've had FOMC come out today with all this news. The market's plummeted. Asia sort of has continued it. Europe hasn't seen it yet, so I'm just wondering whether they're going to come in and just continue the game. Yeah? Now, if you look at a pair like a Kiwi, for example, which is lingering around this, I'm just showing on a daily chart, we're looking at this in class today, lots of support through here, where we are now. Daily 200 EMA, significant, 80 psych level, so it's like a triple digit psych, critical, and been here before. That makes it a little bit more difficult for me to short it. Would you agree? So, I mean, you don't have to trade every single thing that's in the way. So what I say to this one is, okay, Kiwi, well, I will save you for the decent, say, fib of that swing pullback. You know, you go climb up 100, 150 pips and then I'll short you. That would be trade plan number 1. So I'm not going to probably trade you today, but trade plan number 1 will be a bit longer term. Otherwise, go and break this area and then pull back to it, and then I'll short you as trade plan number 2. Well, that's the thing, Daniel, is I'll let it break and prove that it wants to come down. Okay? You watch. There might not be many long-term buyers here if the fundamentals are driving this, guys. We could be at 78 tomorrow. Right? You need lots of patience. So when I look at the pound and the Kiwi and that, you know, I'll put the Kiwi away because of its support here. Right? Similar to the Aussie dollar. Just doing my analysis. Whoa, parity. Whoa, dude. Woo, slow down. Shorting right into parity today? I mean, I'd like to, but the same thing is going to apply. You know, give me the pullback and some fresh selling and I'll take a shot. Give me a nice break, pullback, and once it's broken, it becomes resistance, right? Then I'll take a shot. Don't have to get into it right now, right here. I usually do, Jason, yes. I'm a pullback kind of guy. And if it doesn't come, it doesn't come. Okay, so that's 2 pairs that I'm not really looking to trade. Parity is back at $1, right? With the same value as the US dollar right here. So it's at $1. Okay, so it's a little bit, the commodity currencies, a little bit more difficult to trade. The euro, heading down similar. But you know what? The euro was very strong, relative strength, leading into the FOMC release today because of what was happening in Greece. But then the FOMC came out, and now we've broken, broken swing, so we're bearish. But this is the relatively strongest pair, it looks like. It hasn't really fallen off the face of the earth. And to me, looks like, technically, we're sort of looking to continue, and just maybe the next wave of selling is about to sort of take off here. So I look at the euro as being one of the best candidates to actually trade off. Okay, so that's another one. But before we talk about that, let's just go back to our pound and talk about a few more things. We get this on the pound, and you decide that you're sick of sitting back in these markets and just watching, being a spectator, and you're going to take a shot. Bang! Pull the trigger, sort of around the 21 EMA area. Take a shot. Stop up here somewhere, and bang! Suddenly you're 30 pips up. Woo! That's all right. You know, move that stop to break even. And whew, thank God for that. No, not even going to. A long on the pound, Aren, is going to be a 4-hour change of trend for me. You've got the daily down, the 4-hour down, all in your face. Dude, it's going to be the most painful thing to watch. You're way better off letting some, you know, you don't want to be the first person in this market. I'll wait. I'll long that pound next week if it gives me a 4-hour change of trend. And I'll probably get in at a similar spot as someone longs today. So, suddenly you're up 30 pips. Let's talk about a couple of things here. We need to manage it now, don't we? We need to manage it and try and walk away with some pips. The market is down in every single respect. Probably in the back of your mind, it is telling you that this could pull back to a fib of the previous day's trading range at any time. It could change trend, could head up, knock you out of your trade, and all that effort and sitting there watching it and the risk sort of all gone. Nothing to show for yourself. So what are you going to do about it? Anyone got any ideas about the management? Automate it. It is difficult, isn't it? But you're in it, Gary. You're up 30 pips. Suddenly you're up 50 pips. See, if I took this, if I got this, pull back, took it, and I'm up 50 pips, what do you think I'm going to do? I'm going to set it, oh, it'll be break even, all right. I'm probably going to take 50 and run because I have no idea when this is going to turn around. I have no idea when it's going to come back to within 15 pips of my entry and then get me a little bit like frustrated that it's nearly back at where I entered. Right? So if I shorted that and was up 50 pips, that's my daily bread, right? I'll take it and run. See, if I could make 50 pips in this market when I don't know where it's going, I'll do this. I'd like that. So I can always do this, right? Hello. Boom, 50 pips. Get out. Hello, 21 EMA again. Fresh short. Try that again. Make another 50 pips. Get out. 100 pips for the day. No, Benny, not really. Listen, at the end of the day, I've got this market that is hard to get into. It's fundamentally getting moved. Now, if it starts moving quickly, like let's say you take a short now, let's say this happens. Well, it depends on a few things, right? One of the things it depends on is this, guys, and I was talking to my Asia class about it today. You've had an average last couple of days trading. Average. You haven't really got much to say for yourself. Maybe you took a few losses and a few winners, and you're up 40 pips in 2 days. Not meeting your expectations. And then suddenly you get in a semi sort of risky short because the market's moving in a manner that we're not sort of used to, and suddenly you make 50 pips. By taking 50 pips, would that put many of you back in your sort of happy place that, okay, a little bit of confidence there, thank you, got some money in the account, I feel a little bit better, now I can relax a little bit. Yeah, it sort of does with me. I was talking to my class today about being up 250 pips in a pound trade, thinking if I think it's going for 50 more, there's a good chance that it has to pull back 150 pips first. I might just take the 250 and run. And that sort of sorts your week out, right? That sort of sorts your week largely out, and then you can just, chill. So, it could be the same with this. You can always re-enter it. Right, yeah, 50 pips is all I'd need, and then I don't have to panic anymore, right? So you could do something like this. I mean, you've got a lot of opportunities at your disposal. Take the short, make a quick 50, get out, and say, fine. Pound, if you are now going to be tradable from me now, I will take you at a fib of the entire drop. I made 50 pips on you, now you're going to have to go and give me my decent pullback, and then I'll short you again. Okay. What makes you think I manage 5 to 10 lots, Boyke? Okay, so that's something to think about on the sort of psychology, trade management side. But then there's lots of other things, correct? Okay, get it to an area where, you're, make your 50 pips or a value. No, I don't, Danny. I mean, if it's technically being driven, I'll use large, exits. I do like a good get in Asia, get out in New York type trade. 200 pips, thank you very much. But I do use big targets usually, but technically driven markets, yes. Right? So, continuing with what we're saying, that sort of covers off some the sort of a bit of psychology and stuff as well. Right. So if you're suddenly, another way of managing it, guys, and what I like to do is if you're suddenly up 50 pips, so you find yourself up 50 pips, the market's starting to move, I will trail the 15-minute 5 and just see if you can get lucky. And what I find is sometimes, you're up 50 pips, pulls back to the 15-minute 5 and just drops another quick 20, and you just move that down. So suddenly your stop is where your 50 pips was, so anything below that's a bonus. And then so you just keep trying to do that and see if you get lucky. And occasionally it works. Like I'm finding on average once a week by doing that, I just 10 pips above the 5, Larry, quite aggressive. I've seen being up 50 pips, jammed the stop, make 80 out of it, 100 out of it, double what my expectation was. And it's been quite nice, and definitely a plus in the old trading account. And I was just doing the calculations, talking to some guys the other day. I said, man, if you just do that and get lucky once a week on a couple of trades and make an extra, 40 to 50 pips doing that, and you can trade a standard lot, that's an extra $2,500 a month. or an extra $25,000 a year that you didn't even know you had. And that's some pretty good holiday money and stuff right there, just by having a sort of 5 EMA dynamic stop movement. Right? So, and yeah, I've been doing it quite a bit and it's worked pretty well. I said 25,000, not 2,500, Simon. Yeah. Stop above, dynamically move your stop, okay, with any of your targets. Like today, on the pound, this is the pound. I was, it met my targets down here. This met my target. And so I was just trailing it. It pulled back and it continued on down. It made me like an extra 30 pips, 25 pips than what I wanted. Took that money and ran. And then got the pullback later on in the fresh short. No scaling. I'm not a fisherman. If someone said to me you have to employ scaling techniques in your trading, I would probably scale out of my losers. But the problem with scaling out of your winners is you only ever take like half profits, but you'll always take full losers. I'd rather take full profits and scale out of what I think is suddenly turning into a loser and work things that way. Yep. I just have confidence in my trade plans, boy. I mean, 50 pips a day, man. Just 50 pips a day. Okay? So I go through all my charts, guys, and I look at all this sort of analysis. Okay? And ideally, I'm trying to find something like the pounds yesterday, if we just, or maybe I'll go to my 4-hour chart. I like to find something that's at decent levels of resistance, right? My perfect setup, yeah, I mean, great, I'm 50% out of my winner and it falls another 100 pips in front of my eyes. That hurts because I'm only half in it. While you're sort of psychologically crying while you sit there watching yourself make money, it's sort of a negative thing in my mind. And also I've seen people get so enthralled with it that they'll take like a standard lot, they'll trade it. After they're up 5 pips, they'll take 2 mini lots off the table. After up another 5 pips, they'll take another 2 mini lots. And they've made like 20 pips and most of their standard lot is gone. People get too hung up on that stuff. I'm just like, bang, go and make me 50 pips a day, thanks. Full Monty, goodbye. I'm the simple kind of guy. So, ideally my trade setups, guys, right, scaling, guys, I think if you got up to significant lot size, scaling could be okay. I mean, if you can trade 10 standard lots, and you're up 100 pips, that money, it's sort of money starts to matter. So to say, you know what, I'll take 7.5 or 8 of those standard lots off the table and let the 2 run, and take like $8,000 off the table or whatever, that's good thinking. But when you're like, oh, I trade 2 mini lots and I scale, forget it, dude. It's going to take you forever to get somewhere. Just you're better off just trying to focus on making 40, 50 pips a day on your 2 mini lots and be done with it. You'll get somewhere faster. No, boy, here, I keep going. Okay? So my perfect trade setups, guys, are these ones here, where you're back at resistance that you like. So you look at this actual pound here, sort of going back a little bit in time, but we've been back sort of in this 21 area all month and never closed a candle above it. So fair to say the 4-hour 21 has been in control. And in Asia Open yesterday, we found ourselves right back there. No banning. The moment you start feeling like that, you get too cocky and then you just line up some losers. So back there, back at 4-hour resistance, looking for a change of trend. Market open, thank you very much. And I especially do like it when it's Asia, because there is no better feeling that when you've got like a daily chart down, a 4-hour chart down, back at 4-hour resistance in a long-term downtrend. People have just been selling. You take the shot in Asia and you are thinking about getting out of it at the end of New York. That's like my favorite trade. One of the reasons I like about it is you get in Asia, you sort of you're monitoring it before going to bed or something. You got your stop in at break even, you go to bed, and you do not, I make my best pips are made while sleeping. I don't know if anyone else has that theory, but I find that if I'm in a trade like, took this short last night, so here's the change of trend, up, lower highs, lower lows, pull back, short, meandered around, and David Pagler's pre-London session, then bang, sort of that deal. Once it's doing that, I'm off to bed. Okay? Break even, good night, see you in the morning. Okay? And the reason I like that is I'm never going to be, caught up when you start seeing this, oh my God, look at the big pullback coming. Yes, it is, oh my God. Here comes the pullback. Don't see it. Just sleep through it. And when you wake up, you're way down here and you're like, yeehaw, thank you very much. 150 pips or whatever for the day. Great. Out you hop. Close of New York down here. So that's sold New York closing. And take the money. That's what I like best. Obviously today ain't happening. It's actually continuing. Okay? So either going to have to take cheeky monkey shots in here to get in, or not going to be getting in at all. Am I afraid to stand on the sidelines for the day? No. Minimal acceptable performance, Boyke, what do you mean? Yep. Well, to me it's a technical level, it's not a pip level. Because what you'll find sometimes is if you take like a 15-minute change of trend, say the 15-minute was long, and you want it to short it, so you see something like this, okay? And so you may be short here, you say, okay, that's enough of a change of trend. We've sort of double top, lower lows, pull back, gone. Sometimes, especially around a session open like London, it'll do this, and then it'll just give a quick hello, and then roll over. In his words, it's 15. In mine, it's sort of clear a big area like 30, and then I'll consider it. I'm like a 30 kind of guy. Okay, because then what 30 does is, let's say that a 4-hour chart is down, okay, and you look to short up here. 30 pips in a lot of cases gets you down to like a fib level, or towards a fib level of a rise, where if you're wrong, it's going to do that. Yeah, Chris and I are way different, Lance. Exactly, Banny. I'm all about pips, guys, because as soon as you think about percentages and money and lot size, it all becomes a problem. So, you know, I can sit here right now and quite happily trade my lot size, but if someone said, oh, now you trade for a fund and it's 50 standards, I'm just going to take exactly the same trade. It's not going to affect me. It's not going to affect me at all if I just take the focus on the pips. Yeah, just keeping it simple. So, you know, I like sort of 30 pips down, and it also sort of clears the air for future problems, right? So looking at this fund, 30 pips down from where I probably entered yesterday is, see, that's 40 pips. See, I don't think I even moved my stop to break even until I was sort of down here yesterday, in this area. Okay? Because I expected a pullback of sorts. And why did I put it here? Because that area there is like the area, it's a fib of the rise. If it's heading up, it's probably going to do it from there. So once we get there, I'm like, okay, now you've got to somewhere where I think it could long from. I will put a stop in it, break even, and then small prayer to the Forex gods, please. Let there be a man on my doorstep with a dump truck full of pips in the morning, please. No, Ron, my stop was like 12 pips above the higher highs. My stop was just up here. Spot traded my way into a swing trade, is what I call that. So I just kept the stop above that sort of zone up there. Okay? Yeah. Okay. Yeah, it got nailed. Let's just look at that for a minute, guys. And then we'll end. But this is a very good trick for young players, right? It took me a while to work this out. And this is where sort of psychology and this sorts them in from the boys. Okay? Some you win, some you lose. So let's say this is the sort of pattern I entered in last night. Sort of 15-minute up, 15-minute lower high, sort of meandering round, sort of, yeah, that's what happened. Okay? And took the short somewhere here. And it worked. Great. It was the plan, executed, love it when a plan comes together. But sometimes that doesn't work, does it? Okay? By the way, your stop is the yellow area. Let me just get yellow. This yellow zone up here. Just above the highs, just a little stop up there. It's not far away in a lot of these cases. Sometimes this happens though, guys, where it swings up. I'll just draw over the red arrows. Swings up. Thank you. Thank you. Rolling over. Hello. Oh, fib of the rise. And bang. Ouch. That wasn't meant to happen. We're at the 4-hour 21. Okay? And then something like London opens, and then it sort of pokes its head above sort of previous highs, and then just rolls over and does the same. So trade plan number 1 over here ends up being a loss. like whatever your risk was, 15, 20 pips or whatever. And so you sort of sit there. I mean, I did this for years, guys. Sit there licking your, wounds going, oh, come on, that was perfect setup, resistance. And while you're sort of crying about it and sulking in the corner, it just sort of heads up, rolls over, and then just, hello, oh yeah, bye. See you in New York when you take profit. So I automatically will always have a trade plan number 2, guys. When I'm in long-term resistance like this, looking for a change of trend to short, trade plan number 1 for me will be what I took last night. But if it fails, we call that a kick in the man vegetables trade. Mind my language, but it is what it is. Not meant to happen. Sometimes it does. But then I will always take trade plan number 2. Because if I just lost 20 pips on the trade plan number 1 and then it rolls over again, there's a good chance my 20 pips loss is going to evaporate very quickly, and then it's going to truck on down and do me pretty well. So I'll do that. I'll look at it all the time. If you are trading like this using fractals, using 15-minute changes of trend at say 4-hour areas of resistance or support to trade off, like a lot of people do, and you're taking losers, and then it's sort of heading off in your direction, look at what I've just told you. I would just enter it somewhere like here, Banny, or even later on once it's really got going. But because that's obviously, this red square is obviously like a fake breakout, and it's failed, and the resistance is holding. So, even if you just had to take some sort of 15-minute swing, obviously we're going to head down and take a shot. Sometimes, Dixon, yes. Yeah, and it just ends up being a 4-hour wick. So when you look at it the next day, it's like, resistance held. Yeah, okay. So there's something to think about. Trade plan. I always have a trade plan part 2 up the old sleeve. Something to think about. Let's leave it there, guys. It was fun trading along with you, and I hope to be back sometime. And good luck with all your trading. And drop me a line if you're interested in bootcamp or anything else, and we'll see you around maybe some other day. I think that's it. I'm done. I got other commitments. Have a good one, guys. Cheers.